Hey, Ashwin.
Hi.
Thanks for joining us, even on a Sunday, but I felt that this video is important to make. It's about the Malaysian budget that was tabled and broadcast last week. Now, it's a huge budget, Malaysia's largest, at 332 billion ringgit. I've made some notes about it. It's 3% larger than last year's. It's a record spending budget. And the revenue of 234 billion, Putrajaya expects to receive, it says mainly from 24%, a one-off prosperity tax, and subsequently a 33% prosperity tax to fund this budget. So if I do the math, there appears to be a $98 billion shortfall. And that sort of bothers me a little bit. Now, further along, I picked up that the federal liability, which comprises of the debt and financial liability, Malaysia's 2019 figure was 1.08 trillion, and it has risen in 2020 to 1.18 trillion. So what does that suggest? It suggests that my government would be busy and stressed paying debt in the next year. I'm speaking on behalf of other smaller investors, because I'm sure rich people know how to take care of themselves. People with billions, millions, they know how to live their life. But I'm talking about the ordinary people who've got enough money to see them through. And we want to spend our dollar wisely. We want to invest wisely. Now, further along, you know, comparing our debt to GDP ratios among our neighboring countries, Indonesia's debt to GDP ratio is 36.62%, Thailand's is 58.9%, and Malaysia's is approaching 66%, Ashwin. Now, this stresses me out a bit, and I know that our budget is about stimulating our economy. But what do you think? What is your opinion about how people like me should handle our ringgit-based assets, and how should we hedge against the government situation, the economic situation rather?
Thank you very much, Jessie. I would like everyone to know that I'm also speaking on behalf of the Malaysian investor, because we are putting ourselves in the shoes of the Malaysian investor, and we want to help the Malaysian investors. Now, first of all, your federal debt is now approaching 66% of GDP. And by next year, your statutory debt will be at 63.4% of GDP. And you still have got your 1 MDB financial obligations, and those are at 39.3 billion. What analysts in the market are worried about is this: the budget measures or the goodies are too broad-based, okay, to cause or bring about a real jumpstart in the economic situation of Malaysia. A jumpstart of the economy. They feel that the measures are too broad-based to bring about a solid jumpstart in the economy. This is what the analysts in the market think, and we tend to agree with them. Okay, so as a result of all this that we have just said, it would be good for the Malaysian investor like you, Tessie, whether big or small. When I say big or small, I mean like 50 to 100,000, okay, US dollars. Okay, if you have a net worth of up to 5 million, we can talk about our private clients. But I'm talking on the behalf of the general Malaysian investor. Whether you have
Yes.
50,000, whether you have 5 million, it doesn't matter. I'm talking to you as a Malaysian investor. It would be good for the Malaysian investor to first create a dual source of income. And secondly, to create a hedge so that in case the domestic economy weakens, I'm not saying not doing well, I say weakens. If it weakens, you not only are protected as a hedge, you have a dual source of income, so you have a cushion. You have a cushion against bad news. And I think that is the ideal recipe for every Malaysian investor to create a dual source of income so that if anything goes wrong, I hope it doesn't go wrong, but if it goes wrong, you have got some other income coming in.
Ashwin, you know,
very important.
Yeah, most of us have a little extra money, but then the ringgit has shrunk so much against other major currencies. And, you know, we need to be very wise and very astute about how we go about managing our money. And we don't want to make any missteps, you know?
I understand that.
Yeah.
Since you mentioned about the ringgit, you see, next year, all those countries who increase interest rates, their currencies will start going up. Great Britain, Australia, about to increase interest rates. Europe, it will do it later next year. Australia is coming in as well to increase interest rates. New Zealand has already increased one time. What I'm alluding to is this. All those countries who increase interest rates, their currencies will go up. That means if we want the Malaysian ringgit to go up, foreigners has to be lured, in my opinion only, this is just an opinion, with higher interest rates. Because next year is going to be a foreign investors market. They will put money in whatever currency that gives them the highest interest rate.
Yeah, but I don't see that happening in Malaysia.
Okay, because this year, the US dollar has been in demand because they anticipate 2 rate hikes by the end of next year. So like I said, it's an investors market. Next year, investors will be flocking to currencies that offer them the best and the highest interest rate. So if Malaysia wants to attract the investors, I feel, in my opinion, they have to, you know, they will look at higher interest rates. But like you said, you don't see that happening.
So now our country is going to have a tax of 24%. We call it the profitability tax, and then increase it to 33%. So what would that do to foreign direct investors and other corporations already in Malaysia?
The tax is called
they might be thinking of relocating.
Yes, the tax is called a prosperity tax, but I have the same fear as you. I hope they do not, again, I hope they do not. I hope they can see that this is just circumstantial, but I hope they do not bring about plans to relocate. I hope not.
So coming back to the Malaysian investor, people like me, what would you suggest we do? Could you just simplify it for us, please?
So like I said, I would like to create for Malaysian investors dual income and a hedge. So that if the local economy weakens, I hope it does not, but if it does, you have some other revenue coming in. Now, the macroeconomic situation outside in the last 2 years, ironically, has been fantastic because of the stimulus due to the pandemic. You'll be surprised. The rich have made $4 trillion in the last 2 years because of the pandemic. Why? Because the US Federal Reserve is printing $120 billion per month. And this caused the stock market to go up and the rich became richer. But the good thing is companies have made good money and they're pumping back more money into the economy and business. And that's how the country benefits. When you look after the big boys look after the economy. And this is what's happening in the US right now. So for Malaysians to take advantage of the macro situation, okay, there are 4 things to look at. Equities, ETFs, cryptocurrencies, and foreign exchange. Now, in the equity market, ever since the pandemic broke out, we have now two economies, the new economy and the old economy. The old economy is the usual business, banking, healthcare, mining, industrial. That's the old economy. The new economy has emerged or become stronger, faster because of the pandemic. We have new habits now. We have Zoom now. I'm talking to you on Zoom now. I'm not meeting you. I'm not meeting you in an old economy hotel. I'm not.
Everything is remote.
Yeah.
Everything.
So we are now using a new economy, Zoom, to communicate. We are no longer going to a Shangri-La hotel to have high tea. So the hotel.
So it's all platforms, isn't it? We're talking platforms.
So realistically speaking, Shangri-La hotel, the old economy, loses out. Zoom, the new economy, benefits because now we are sitting at home talking on Zoom. Very good example, right?
Yeah.
So this week, one of the biggest catalysts of the new economy was unveiled. It's called the metaverse. Facebook changed its name to Meta because now Facebook is creating a new world called the metaverse. Imagine the internet. Imagine a world where you, after wearing a pair of goggles or a pair of glasses, can enter that virtual world. Okay, what we call virtual reality or augmented reality, and you can take part in everything in that world. It's like the movie Avatar. The guy was doing some experiment and he went
stepping in and out.
So that's what the avatar is. The avatar is the metaverse is Avatar and the real world. And there's a new term now. The metaverse is the virtual world, the avatar world. And the real world, what we have here now, is going to be called the meatverse.
Oh dear.
Meatverse. Because meat, we are made of flesh and blood. So it's meatverse. Now let me tell you how interesting this is. And I just saw the video from Zuckerberg last night at 3 a.m., 4 a.m. in the morning. Imagine you are looking for a tennis coach. The old economy is you go and hire a tennis coach. But the new economy, the metaverse, you don't need a tennis coach. You go into the metaverse, you pick up a tennis coach, and then you can play with tennis coach and practice your tennis skills in the metaverse on virtual reality. You don't need a tennis coach. Same thing for fencing. Zuckerberg was playing fencing with the avatar, with a robot, with a computer. You can.
So it's like a green screen, and you wear these goggles, and you make the actions like actors.
You can wear the goggles. They also have signed a contract with Ray-Ban to create glasses where you can enter. If the goggles are too bulky, you can do that. So this is the metaverse. Now here's the scoop for every Malaysian investor.
Right.
According to our Algos research, we do make data mining 24 hours, okay? According to our Algos research, 18 companies will benefit from the creation of the metaverse. This is the new economy. We haven't come to the old economy yet. We haven't come to cryptocurrency yet. You can make money from cryptocurrencies. In cryptocurrency universe, we have decentralized finance and blockchain. These are going to be the driving factors of cryptocurrency. Bitcoin is just a fraction. Don't think about Bitcoin. Think about the coins that will be used in decentralized finance and blockchains. These are a new set of coins that will benefit, and Malaysian investors can benefit as well. Today, we have Ethereum blockchain. 70% of all blockchains are Ethereum blockchain. And you have seen Ether go to record high. Malaysian investors can invest in Ether, spot Ether, or even Ether derivatives at a lower cost and make money from cryptocurrency.
Hang on. What I'm feeling here is a complete shift, although very subtle, but it is a shift from a mindset where everything is physical to a non-physical space. And that requires a shift in our own way we operate in the world.
Well said, Tessie. Let me tell you why you're saying that.
So
I agree with you 100%.
How to do it practically, step by step, so there aren't any missteps. We need a guide. Otherwise, we cannot, walk through this maze. Let
me tell you this interesting thing. I agree with you what you just said. We are now shifting from the reality to the virtual world. Look at Bitcoin. Look at Bitcoin. You can't hold it in your hand. Look at
amazing. It's kind of scary too. It's kind of scary.
You are used to what we call the fiat currency, which is holding notes and coins in your hand.
Yes.
Coming to an age where there's no more money left. Everything is just a number being transferred from phone to phone. That is why blockchain will think the whole system. With the blockchain coming in with decentralized finance, you will no longer have a physical checkbook or a physical piece of note money, or even the telegraphic transfer, because now you can transfer money from phone to phone. You don't need to do TT. So can you see how fast things are changing? Malaysian investors, please do me a favor. Please enable
everything
us to
seems
create
to
for
be
you a double
happening
income.
so quickly, Ashwin.
Yes.
You know, this budget, and then suddenly it's like the whole system is unleashed. We need to take back control of our own financial security.
The budget is one thing. This whole system, which you call being unleashed, it has been going on. Let me tell you this. It's been going on for the last 2 years. For the last 2 years, the new economy has exploded. This happened when? Let me tell you when the new economy exploded. The new economy exploded on 23rd March 2020. Let me give you the exact date.
Wow.
Because on that date when everybody was shitting in their pants, I'm sorry to say this, we were buying stocks. On 23rd March 2020, we were buying stocks. And one more thing, may I add, very important for Malaysian investors. If you are worried that you don't have the big money to invest in stocks, do not worry. Our program for the small investor like you, Tessie, is designed between 50 to 100,000 US. Why? Because there is an instrument called the CFD, Contract for Difference. For example, Apple costs $150 a share. With the CFD instrument, you can buy Apple for only $15 a share. So if you buy 100 shares, it only costs you 1,500 US dollars for 100 shares, as opposed to buying $150 a share times $100, which is a huge, massive amount.
Yeah.
So together with the help of the CFD, today, if a Malaysian investor has 100,000 US dollars and 2 years waiting time, we can even make him feel like a Warren Buffett, and he can make good money. When I say good money, he can make an average of 15 to 20% per trade.
Wow.
Per trade. And there, like I said, to start with, I haven't gone so deeply because I can go on talking till 5 hours. The metaverse alone, the metaverse concept alone, 18 companies will benefit from this. If you make 20% per company, how much money we're talking about? And you use the CFD to invest $1,000 to $2,000 or $3,000 per company. Now think about it. Think about it. You can do something with 100,000 US dollars, and you can make good money.
Yeah.
So I'm just I want to hold your hand.
I'm just listening to you, and I'm thinking of my past, my experience, where I've invested in banks and they've wanted me to buy their products for limited yields per annum. I think they were quoting below 8% per annum, and they're saying it's a sure thing. But then with currency erosions and so many other opportunities that you are discussing with me now, it seems that, you know, going the conservative way is more risky.
You see, Tessie, every time when we ask for our fees, people come and say, when I invest with the bank, they don't ask me for any upfront fees. But let me tell you why we have a fee. Because we make money from fees
time
only.
and risk.
No, when you go to a bank and invest, for every buy and sell order that you execute through a bank, they make a commission from you. They make brokerage from you. That's how they make money from you. We do not make money from your buy and sell orders. We do not handle your money directly. The money is your name, your account. We ask for a fee because of our service. We have an algorithm, 75% artificial intelligence, 25% human. We have research. We hold your hand. We do things for you. We tell you what to do. If you can't trade at night, you're sleeping, we do things for you. For that service, for our accuracy, for our algorithm, we charge you a flat fee of 5,000 US dollars per year to do all these things for you. We do not make money on your buy and sell orders. We don't. And we don't keep your money in our account. It's in your account. You just give us a permission to say, do things for me, and we do it for you. That is why we charge you a fee.
For the first time, I'm actually understanding why we are doing things the way we're doing, as opposed to, you know, what I've been doing in the past. And I feel more in control of my investment decisions now, and I know what I'm going to get at the end of the day. So This is why I feel compelled to share this message with my friends. Now, is there any other nugget of wisdom you can share? Because I'm mostly concerned about the man in the street who needs to protect his nest egg, his hard-earned money over the years.
Yes.
And I'm sure the people who are wealthy, they know how to put their money offshore and so on. But what can you ask us to do simply as a start? What can we do with you?
We like to hold your hand. Like I said, if you agree that if you agree with our concept of $5,000 per year, okay, and we hold your hand 100%, you can contact us and we can start advising you on what to do, and we will hold your hand. And at the same time, we're not saying there's no risk. Every investment, listen to this, every investment has a risk, okay? Even a bank will tell you that. But that's why it's called risk management. We manage that risk, we compress that risk. Notice I always talk about paper risk, not actual risk. So far, I want to boast this. Our clients have not faced, realized risks due to unforeseen circumstances. They only had realized risk due to unforeseen circumstances. Like, for example, we did not plan the virus. If our clients cut loss because of the virus, we can't help that because we can't control the virus. But so far, within factors within our control, we have never had realized risk, only realized profit. We haven't had any realized loss, only realized profits. So if you can handle a paper risk of 20%, okay, means you go to bed saying that you have losing 20% on paper at this point of time. We can help you, because if you can wait for 12 to 24 months and you got 50 to 100,000 US dollars, okay, and you want to make decent money and protect you and have a dual income and hedge your position, we can do things for you. But like I said, there is risk. So it's only paper risk, because today's paper risk can be tomorrow's profit. So we can really help you. And let me remind you, like I said, next year, all those countries who start increasing interest rates, their currencies will go up. And if you are saying, Tessie, that you don't see any interest rate increase in Malaysia, then you tell me what's going to happen. And I like to advise every single Malaysian out there, please do not buy bonds, and please stay away from bonds, please. Because when interest rates go up, bonds will go down, because people are demanding more interest rates for your bond. Your bond price will drop and your bond yield will go up. You see, this is how it works. Bond yields and bond prices move in opposite directions. When bond yields go up, bond prices drop, and vice versa. So you may buy a bond thinking I'm getting 8% a year, for example. But what you don't realize is when the bond yield goes up and your bond price drops, if your bond price drops 5% and you're getting 8% a year, in the end, you're only making 3%. Is that worth what we call the risk-reward ratio? It is not worth. You buy a bond and only make 3% a year, it's not worth. You take so much risk to make so little money. Please stay away from bonds, because bonds have been going up in the last 20 years because they have been printing money every financial crisis, and bonds have been going up. But this time, please understand, the situation is different. They are no more going to print money next year. They're going to drain money next year. When you drain money, interest rates go up. When interest rates go up, bond prices fall. So please, do not let your bank give you some other theory to say, buy bonds, buy bonds. Please do not do that.
Yeah, I think because they're working on the safety issue with us. They want us to feel, that that's a safe bet. But actually, they have not considered the risk-reward ratio.
Exactly.
We don't understand.
They keep on looking at the coupon. They look at the coupon that you will get 5% a year. But they don't realize if the bond price drops, your 5% risk reward, your 5% reward of the coupon is too little. It's too little.
So
unless you tell me you give me a 20% bond, then it's different.
I think the Malaysian government has done well in planning to do this to put money back in the pockets of Malaysians. This record spending plan is a good idea.
Of course.
It's a broad-based budget.
Yes.
I feel that's a good idea to put money back in the people's pockets.
Yes.
However, it is now incumbent upon us to take make wise decisions about our funds. So this is where we take control.
I'm advising this move as a precautionary and as well as a dual income, so that if anything goes wrong, I hope nothing goes wrong, but if the domestic economy weakens, you have another income stream and you have a hedge.
Yeah.
Of course, if everything goes well, then it's a win-win situation, right?
Right,
but if something happens, at least you have something else as a cushion to fall back on.
Yeah.
Yeah.
And again, Ashwin, I'm talking to you about my perspective, from my perspective as a retail investor. I've not considered the position of the corporations and industrial money that's in the country. I'm only
Just like
looking
I'm talking in this video and feeling for the Malaysian investor and talking to protect the Malaysian investor.
Exactly.
To let the Malaysian investor make money.
Yeah, so there are many perspectives from this budget, and I'm sure everything works for the people involved, but I'm talking about how to do it for our segment of the country, the population.
I explained everything just now because I want the Malaysian investor to see that there are things going on and you should not waste the opportunity and you should take advantage of this opportunity.
So thank you, and thank you, and thanks especially for putting up with my layman's language of the economy. But yeah, your insight always helps, and I always feel calmer and more sure-footed with you. So I want to make sure that my friends get to hear about this.
You see, let me tell you
what you're doing.
Let me tell everyone who's watching. There's always a solution in the financial markets. Okay, if you decide on your level of risk and you decide how much money you're going to put aside, there is always a solution for you to make money, for you to be protected. There's always a solution. There's no such thing as, oh, I lost money. When you lose money, I can tell you something that Warren Buffett said. When you lose money, it's because of poor financial planning. It's because of poor financial advice. Nothing else. I will not take any other excuse. If you say, oh shit, last year I lost 20%. I will not be sympathetic towards you. Because if you don't accept the right advice, if you don't do the right things, you will lose money. It's as simple as that. That's why Warren Buffett says, never lose money. Okay? So if you lose money because of sloppiness, then what can I do? What can we do? Because
well, no one,
if you reject my advice, if you reject my advice, I can't help you.
No one has talked to me and explained things to me the way that you have. So I'm so grateful, and I'm grateful for you to share your time with me today. And can you please tell us how to contact you, Ashwin?
My email is ashwin@ppchk.net. On WhatsApp, we were contacted at bit.ly/algotrader. On Telegram, it's bit.ly/algofactory.
Thank you so much.
You can go to our YouTube channel to watch all our videos. It's called bit.ly/algowealth.
Thank you. Thank you very much.
Thank you very much, Jessie. Thank you.